Hey, what's up, everyone? Welcome to another episode of Trading Tapes with me, Sam, Chris, and Judah, presented to you by Investors Underground. Now, tonight's guest is one of the funniest traders I know. We chat daily and we met for the first time in Vegas, and somehow we managed to bond over British comedy. And you'll quickly notice from his accent in a second that he is not, most certainly, not British. It is, of course, Emil. How you doing?
Yeah. Thanks for having me, guys.
Thank
Yeah.
you.
Thanks for coming on.
So,
Yeah, really good.
So, Emil, how are you? And just by perhaps way of introduction, just in case people don't know who you are, just tell us, I don't know, a little bit about yourself.
Well, I trade for quite some while now. I started in 2000, mostly investing in blue chip. I used to trade Romanian stock market, and everything started from there. Everything went well until 2007 when the crisis hit, and then I got hit myself. So I had to pull out myself from the hole, and here I am.
Here you are.
Yeah.
So, last week, we seem to have an awful lot of feedback about Nick's Tesla liquidation trade. If you haven't heard the story, guys, go back and watch last week. Can we ever top that story? Have you ever lost or been liquidated whilst liquidating yourself, or is that story just never going to be topped?
Yeah, I'm not sure someone is going to beat that story, but we shall see. I mean, records are meant to be broken, right?
I mean, I'm going to ask everyone everyone we speak to, I'm going to ask them, can you top that story? I mean, it completely shocked me last week. So to kick things off, you're obviously, it's nice, number one, actually, to have two Europeans in the room. Usually I'm absolutely overwhelmed by the North Americans, but when do you trade? Because this is, your time zone is, I mean, I'm GMT. You're like another couple hours on to me, right?
Yeah, I'm 2 hour plus. So for me, when market opens, it's 4:30 p.m. But I'm usually active early in the morning at 4 a.m. I find sometimes there are few niche trades there, and usually what I do is try to break the day by time of the day. So I know that sometimes that could be a potential trade for me early in the day in pre-market, even at 4 a.m. Then the next important time of the day is going to be 7 a.m. and then obviously the open. So usually I break down the day by these times, and I am trying to, since most days I'm in front of computer early, see if something is moving or it worth watching. I am trying to not stick around after 12 p.m., which is 7 a.m. My time zone. So, I'm sorry, 7 p.m. my time zone. So for me, it doesn't make sense since I have this. It's pretty late in the day, and I'm already tired. I'm not focused, and I have others obligation also, like family. So not really. I'm trying to stick with trading around these times of the day when I know that there is a potential edge for me, and even if I'm having some trades, sometimes I'm swing them or I hold them later in the day, but usually I'm not opening position after 11:30
Yeah, and then what?
a.m. and try to just babysit them if I have them, and if they behave, I might hold them over. If not, I'm just going to cut it off later in the day, but not really opening new positions late in the day. I know there is some edge obviously late in the day, and I see a lot of guy exploit the edge, but it's just not for me. It's doesn't make sense statistically.
Yeah. And what does your morning routine look like? Because I know for Sam, he talks about how his mornings are the most enjoyable part. He's going out golfing. He's taking ice baths. He's probably drinking a non-alcoholic beer. What do you do in the morning?
My morning I had the best morning ever. I played golf, got up, played golf, had a lesson, went and I had the best gym session I've had in ages. So yeah, best time of the day.
Yeah. Well, usually I'm a gym rat, so usually in the morning I'm going to the gym, and that's like church for me. So every day, six times a week, most weeks, and so wake up at 7 a.m. more or less, taking kids to school, and then coming back, have some breakfast, and then heading to gym. And usually, for instance, if I'm early in the day, I'm checking. In the morning, I'm checking to see if there is any after-hour activity in some stocks, and then I know if I should go back to 11. 11 a.m. for me, it's 4 a.m. US market time. So I should go back home to see if there is something to trade or not. So usually I'm coming back 11:30, and then having another meal, and then firing up the computer, start to do some research, see what's gapping, see what's setting up, do a little bit of due diligence on these stocks. And usually when I'm trading small caps and when I'm trying to fade them, most of the time I'm trying to see what's the story behind. So there is an fundamental angle, let's say, but the most important thing for me is really the timing. So usually I'm waiting, and I'm trying to time them the best as I can, and have a trade there. So I'm trying to stick with that, and I'm waiting 7 a.m. see if something is setting up again, and then usually I'm in and out during these times, and then after 8 a.m. I'm pretty focused. I know already. Usually I already did some trades, and I'm trying to build some cushion. In pre-market, it's not like you are going for a home run. Sometimes it's working, but most days it's just padding the wallet, let's say, and then have built some cushion for when the market it's opening. And then most of my best trades are 10:30. So usually I'm trying, even if I'm getting an entry earlier, I'm trying to wait for those times of the day, see what's setting up, and avoid all the traps. And after that, slowing down 11:30, and pretty much the day it's most days, like 90% of the days for me, the day it's done, and doing other stuff around the house. And
That's nice.
that's my routine. I can be more specific, but in big picture, that's what I'm doing.
No, it sounds good. I'm just wondering, like, obviously we both go to the gym. Judah, Chris, when do you two fit in the gym?
Judah?
I actually, that tonal machine, the machine that goes on the wall, it has the two arms and the videos. It's like subscription based, and it has attachments. You could attach anything to it. It basically has like every workout you could do on it.
Oh yeah, I've seen it. I've seen that.
So it's a great machine, but my subscription expired and I just never renewed it. And like I've treadmill in the basement.
That's such a great way of saying I don't go to the gym.
Yeah, everything I have is really here. But
yeah, like, I've got a gym membership. It's really good, but I haven't been in 6 months.
I used to, but now I don't know. Like I have the Bowflex in my basement.
What's the thing? Yeah. During the pandemic, I bought a full set of barbells and
me too.
Weights and racks, and it was fun because I was doing it outside in the sun, which was pretty awesome. But I can tell you, after the pandemic was over, I got left with everything, and I can say that it's one thing to do it alone at home and or go outside at the gym. So I prefer to go at the gym because alone it's quite boring.
Well, I
That's
did,
like
for
I
me,
did
at
the
least.
same. I got about, I don't know, maybe 2 or 3 grand's worth of gym kit doing absolutely nothing. I bought an assault bike. I've got like 200 kgs of plates. I don't know what that is in pounds, maybe like 450, 500 pounds. I've got dumbbells that go up to, I think I went up to 50 or something like that. And they do nothing. I need to sell it. I mean, it's just nothing will ever compare to the social environment, I think, of a
Right.
gym.
See that I actually kind of prefer working out alone. So I actually back in the day, I don't even know if you guys know this, but I used to do personal training as well. And so I did that for several years. I know I had like 50 different odd jobs, but I really like just having like a very short, like sustainable workout routine. And I usually either do that like in the apartment or, sometimes if there's like a gym or something. But I always joke that like my workouts look like have you ever seen like Rocky IV when he's like training in Russia and he's just using like whatever he has around him? So like that's honestly most of the time like what I'm doing. I'll do a lot of like calisthenics stuff, but I mean I'll be honest, I've used like pasta cans as like
Really?
things. So like most Italian workout you've ever seen, just but
Yeah, so Chris, I've got some dumbbells if you want to buy them. I'll ship them over.
sounds good.
Also, Emil, out of the 3 of us, the person you should be the most scared of in a dark alley is actually Chris.
Oh, really?
It's amazing. No, it's amazing. It's the last thing I would have guessed that Chris possesses or has achieved.
Why is that?
Go on, Chris. Take it away.
So back to odd jobs. I also used to be a martial arts instructor for about a decade. So self-defense. So I
Really?
I
Really?
was in
That's
martial arts
awesome.
since I was 5. Yeah, my parents were like, football's too dangerous for the kids, so we're gonna like put them in cage fighting. And I'm like, I don't know what the logic was.
Yeah, that makes sense.
Yeah.
And what did you specialize in, and what, I don't know, what rank or whatever have you got? Like what belt?
Yeah, so I have a black belt in 2 different martial arts styles, but it was a mixture of stand-up and grappling, so Kempo Jiu-Jitsu.
Wow. There's some.
That's something.
That's
something.
I mean, it's just we met Chris in Vegas as well, and I just wouldn't have guessed it at all. It's surprising actually. But anyways, let's move on with like I say, we'll be here talking about the gym for a while. That's one thing that me and Emil spend a lot of time talking about, to be fair. That and barbecues, but more on that later.
Yeah,
So
right.
Emil, you've been trading for a long time. What's something you think that you pick up on and you adapt to much quicker than perhaps, say, someone newer?
I think that the screen time is something that everybody who takes this seriously at some stage is going to ramp up his game, because in my opinion, screen time is some sort of an edge, because you see these things repeat over and over. Obviously, not every time is the same, but at least you kind of know what you should avoid. So I would say these days I'm more capable of adapting and feeling when the market shifts for a bit and say, okay, if I'm long bias, okay, market might have a break or some profit taking, it's going to be a dip, and I most of the time I'm trying to stick with the trend, and then even it doesn't matter if I'm trading small caps or big caps, I'm trying to position myself with the trend, and when the trend is broken, then try to get on the backside. So I would say that in my case, it's the screen time over the years that makes me, be more patient and not so anxious to trade something to make a quick buck. Not that I'm not like it, but um, most of the time I'm these days I trade very little, um, so way less than I used to. I'm trying to be more focused on one, two, three things, and then try to nail them down, and not really fight with. I used to. So again, I think experience in my case is coming from sitting in front of computer and see them. And I can say that these days I'm not like this. I mean, I'm staying in front of computer. I know and I'm still learning, and I'm always student of the market, but I do not spend so much time like I used to. And the confidence grew up over the time. And also in the past I used to be more systematic, and these days I sort of know the stats from the trade out from the setups I trade. So I try to stick with price action, and then position myself accordingly, pretty much.
How did your style change over the years? From like, because now it seems like you're mainly looking to like short those small cap names that have ran enough and go along some of the larger cap names that are setting up. And I know
Yeah,
you switch them around, but that's what I feel like based on what you write in chat and your watch lists. That seems
right.
like how you trade mostly. So
So I started being a long bias trader back in 2000, and all I knew was buy the dip, right? Until shit hit a fan. So, and wasn't that the dip was keep dipping. So I've been in a very bad situation. So I think that was such a big lesson for me back in the day, because, and even sometimes I feel that those scars are still there, because uh, okay, I evolved in being more short bias, and I'm mostly short bias on small caps. But I'm going to cover that in a few. So I think that was such a big lesson for me, because I lost almost everything in that experience. So that left some scars, and that made me kind of be defensive when I shouldn't have, So over the years, uh, and after 2010, when I started to uh, see how I can take advantage of the shorting stocks, and especially crappy stocks, and I started to get better and better, let's say, until up to one point. And then I probably was shorting 90% of the time. And then 2020 hit, everything was nice. You could have any money, long and short, were a lot of opportunities day in and day out. But after that, the game changed again. So these days, in my opinion, it's much harder to be short bias, especially on these gappers that have pretty much nothing behind, not even a PR sometimes. So they gap up on nothing, some obscure pump or whatever. They do not have cash, they have dilution, and they still squeeze. So obviously makes no sense, but in a way it makes. So the trades are very crowded. The borrows are available. So that's why for me, it's not necessarily okay. It's important to know the fundamental angle and to know what to trade, but it's also important to be able to realize that timing it's more important, even that dilution or lack of cash. So that's what I'm doing these days. So I'm trying to adapt. So that's the way I trade small caps, really long small caps. But on the other hand, I really like trading big caps. For instance, today I had a trade on Google, and I'm still in it. I really like the way it's setting up. So I have no problem going long on this type of trades where I believe that momentum could go further, let's say.
Yeah, and you were mentioning, like the scars of kind of after going through a cycle or after like a huge drawdown, especially, you started, you were 100% long, you were an investor more or less, and after going through that cycle, you end up with all these scars and these lessons and realizations about the market. And I feel like that's one of the benefits of having a lot of experience, but it can also be something that holds you back a little bit of
Exactly.
going through those things. So can you talk about how some of your experiences held you back from maybe joining or maybe not trusting markets enough when you should have?
Yes, of course. So I struggled with this for a long time in the past. It took me years to build up confidence after that, because that's what I got crushed. So like I said, I lost almost everything, and I mean like 90+%. So that was a huge lesson, like I said. So it's very hard. We know that in trading, trading, it's very important to believe in yourself and have confidence in the setups. That's why you see guys. I mean, all of us are. Each one of us is different, right? So for me, for instance, I can trade 1,000 shares. Sam can trade 5,000. You 10,000. Judah 100,000. So the PNL at the end of the day, the trade is going to be the same, but the PNL is going to be different. And the difference between us would be this confidence. So you believe that in that setup, you believe in yourself, you are able to pile in size. So I struggled with that a long time, up to one point when I realized that, okay, I have to do something to get back on track. Even though I knew the setups, I knew, how I should trade it. The trade was looking good, but the size wasn't there. So for me, that was the drawdown. It took me long time to recover, and even sometimes today, it's very easy to compare yourself with others, but sometimes I'm having a trade, it doesn't matter what, and then you see a similar trade with yours on in chat or whatever, or on other guys, and you say, okay, I've made whatever $100 and that guy made 1,000 on the pretty much same trade. What should I do? I mean, I always push myself, and I always try to put myself against the fence and try to improve and try to pyramid better. And it's always something. And most of the times it's working, but it was a struggle for me.
It's
Definitely.
It's an interesting point though, like, because I think mental scarring, I think, is massive, particularly like for a lot of us, human nature. We probably, our ancestors probably just hid in a cave, and that's why they survived. They probably weren't the hunters. They're probably just hiding in a cave. So we have that scarring. But how have you got over that side? Because I think sizing is like such a superpower. And I talk about Nate having like, just seems to get his sizing pretty much perfect all the time. Like he'll be light on the front side, and then he'll size in heavy. But like today, to be fair, today I did like an okay job. So we're recording on the 3rd of April. Like today we had BVPR, and I oversized. Is a good op, so I oversized, but still like I almost like took it off too early, which defeated the purpose of oversizing. So how have you got over that hurdles? Because I think that's an interesting topic that isn't really discussed a lot.
Yeah, it's like I said, it was a struggle, but it's funny because every sit back, it makes you realize that you have some I mean, it could be lack of infos, or maybe you're not doing the proper job outside the trading hours, like reviewing things, see where you are good, where you are not so good. But I think for me personally, and I think in general, it's a personal thing, because for me could be okay to make whatever amount, like it doesn't matter, right? Like $1,000 each month, and for you could be 10,000. And I think after a while, I can talk only from my experience, and my experience is that right now I'm in a spot where I still push, but I'm not risking like I used to. So I'm not in a position to. It's very important. It's like the timing. When you are 20, you can push whatever. You lose your money, who cares? I mean, you have all the time in front of you to recover. But once the lives goes on, it's a little bit more complicated. And for me personally, I'm in a spot where I'm not looking to risk that much. I am looking mostly to be good, do good trades, not necessarily grind, because like I said, I'm always trying to improve. I always try to use the proper size, even though, for instance, these days I trade smaller size than I used to in 2020, because the opportunities are not the same. Even the setups, you see a lot of people complain that there are not so many plays out there. But the recurrence, obviously, it's not the same. So trades tend to be more crowded, and so on and so forth. So it's a difficult environment either way. I mean, trading wasn't never been easy, but if I would compare today's market with what we had in 2016, 17, or I'm not talking about 2020, because 2020 was a gift for every one of us. It's much easier than it used to. And now we all have these tools where you can check dilution, you can see a lot of stats. So I've seen a lot of people talking about edge erosion, and I personally, I still believe that the trades are there, but we have to be more picky, which is quite difficult at times. It's easy to say, okay, I'm going to wait, but sometimes you wait and the trade goes without you, and you said, okay, I should have. And then next time you try it, and then you should have waited. So it's always an adapting. So I think all comes down to sticking with rules. And if your stats or whatever, like I said, I used to be more a statistical type of trader, and these days I'm mostly, I could say, gut trader, but I think it's based on experience. So that's the way I see things.
Yeah, and that's like the process of like adapting to markets, and just sometimes it seems like there's a lot of setups and sometimes there's not. That's a good point, that like there's almost always a good amount of setups, but there's not always a good amount of setups within your wheelhouse. And so it's like people training their eyes to learn new things. And it's like might be a dumb example, but like imagine if all four of us walked and saw like this open like field with like lots of hills or something. Like Sam might see it as like, oh, this would be a great golf course, and Judah might be like, this would be a great real estate like development thing. I might be like, this is a great place to lift pasta, and Emil might say something else. But I think it's so much of like what we see is just kind of what our bias is or what our background is. And if you just see it as a blank slate, and like the market is a blank slate, and then constantly looking for like, okay, even though I don't have anything moving in my wheelhouse, what was moving? And then trying to see, do I know anyone who is able to trade that well? And then can I learn that setup? And I feel like that's a huge part of building a playbook, especially with, a lot of experience. So that's just something that came to mind. And then I had one question for Judah. So we were talking about sizing, and you're kind of like the resident swing trader and everything. So how do you handle different sizing? Do you size up when the opportunity is really good, or do you have a more systematic approach with that?
It's really more systematic. It's pretty much how far my stop is, and generally it'll be the same amount. So size will be less if the stop is further away, and vice versa. And I think it all comes down to really process, like we were talking about, like sizing and things like that. But at the end of the day, we all see, I think, the same thing. Like if you're a swing trader, if you're a technical swing trader, we all know what these patterns are. We all know what these like positive, good-looking trend charts look like, and we all study the same things. It's all about just your process and all about your risk and all about how, like, for example, somebody else could take a larger size, but if he does that, he's more prone to get stopped out earlier than I will, which will which will lead to him being out of the trade and me still being in it because I gave it more room. So that's one thing. So I try to just stick to certain levels, key levels, either the low of the day or like real support levels, and I adjust my sizing around that. Like if something's too far away, I'm going to adjust my size so I could still be in the trade if it does come down to that level. Like I try not to be the same all around because then it won't make sense. I'll be losing more in the trades that I'll be making on. So it's really systematic. It's all dependent on where my stop is, and then I adjust it. So I'm pretty much losing the same percentage on each stop out. And yeah, it all comes down to your process because we all see the same things, but some people will jump in earlier and not wait for that trigger. Some people will be satisfied taking profits after 2 days. Some people will stay in it for weeks and months and make more on that. But we all see the same thing. It just comes down to your process, your risk management, your entry, your exit, and all that.
The thing I just find sizing such an interesting concept. And just bringing up the chart. So I traded this one today, and in terms of like the setups that I really like, typically it's like I like day two. I like day twos. Let me just get rid of that. Get rid of that advert a minute. I really like day twos, but then this one it's just like crazy, like in terms of like the price action. Like I want to get extra conviction and I want to be like, okay, this is a day two. It's one of my favorite setups. I've got really good success rate, etc. But in that moment, like in terms of like, even though we stuffed here, then then this candle was, I think this was a wild candle here where it just stuffed, soaked, ripped straight back up. And obviously, like, I'd love to tell you what I was thinking in that moment, but I was just thinking, quite frankly, holy shit, I'm about to get stopped out, and I was already oversized. And that's the difficulty, I think, for me in that moment, particularly with sizing, is how to overdo it. And that's something that a lot of people are always talking about. So like, Judah, in that environment or in that moment, or to that point, how are you able to like differentiate between those swing setups which are better, or is it just a case of, I don't know, I just want to be consistent, one risk level every single time?
So I actually want to share my screen for a minute. Yeah, let me share my screen for a second. There's something that I set up on my TC2000, and basically it's up here, right? I have these things that I set up here, and down here basically helps me with my size kind of off the bat and like instantly. So this max size is the most that I would want to put into it. Okay, let me go to something that's positive on the day. Okay, so if I were to stop out of this trade and if I were to take it right now, my stop loss, let's say, would be low of day. The most I would want to put in to lose 1% of my whole account would be 2.65%. And that's pretty much based on how much it's already up. And the math is basically stopping out, taking it right here using low of day is 1% risk of the entire account. So generally, I wouldn't want to take more than 2.65% if I was using low of day, which I don't do that usually. If I was going to take this, I'd pretty much like see where I would want to risk. I mean, at this point, it's up too much. Like this already here is 10% and 13%. But if I really want to get into something and this is below 20%, I'll figure it out and adjust it. And then the max shares, this is basically off the average volume and average dollar volume and liquidity for liquidity reasons. This is just here. And then this is the max dollar amount. So in shares and dollars, and pretty much this is the most that I could put into this trade, having no problem with liquidity. And this is just something else. This is not my account value, and this is just something else that I use. But it's pretty much based off this max size level, and it's all the same. Like I'm using that same max size. If, for example, the max size is 20%, I would put 20%. That means the stock's 5% from low of day. Stopping out would be 1% of my total account, and that's what I mean by it being leveled out the entire time. So if something like VVPR, I was taking intraday, like something around here, if you're using high of day, it's already 10% to the upside. So to be comfortable, I wouldn't want to risk more than 10% of my account, because if I were to stop out there, it's 1%. I'm okay with that. Somebody else who's throwing in like 20-30% of their account here and using high of day, like that's where the risk gets tough, and that's where you get scared and you stop out earlier, because you're seeing your P&L go down way more than you could afford based on your account level. So depending on where it is and where your stop is, you may be sized too much, and the proper level is just too far away. So it all just comes down to like being a little more systematic, at least for me. This way it could be more like robotic and less emotional. And it's just like an easy system for me, and that's what I typically use and how I see it. And this is just where there's like a bunch of names of open, I could easily just like glance at this and see like what I need to put in on the spot.
Yeah, that's pretty cool. I mean, like Daz has. Do you use those hotkeys, the magic hotkeys, Emil? I call them the magic. I think they're all called all sorts, but where they just basically just press a button and it works out your size based off of your dollar risk.
No, not really. I use only few key basic hotkeys, and usually I'm selecting the price from a montage and then and the size, and I'm just ready to hit it with hotkey. And I have another few hotkeys for covering if doing something stupid or whatever. But usually I'm just keeping with basic stuff. I mean, I'm not that good with managing hotkeys, and so yeah, keep it simple.
These hotkeys are brilliant, though. I think in terms of like, particularly for anyone who's, because I think one of the biggest issues I think that I used to face was when I used a different broker was just the inconsistency of sizing, and I just roughly go, pull out a figure out of the air and be like, oh, I think I need 5,000 shares or whatever, and then trade that, as opposed to, no, I actually need 3,458 or whatever. So I was able to consistently lose and then consistently win, and then that was actually probably one of the things that actually led to me, compounding much quicker, was just that sizing. So I think it's really important.
Yeah, I think one important aspect when if we are talking about sizing is that we shouldn't trade the same size on every setup, because sometimes, I mean, the way I do it is I try to give a grade for each setup I trade. So if let's say I'm having a B plus or B type of setup, I know that has a decent probability of working in my favor. So I'm going to use, let's say, 1,000 shares. But if I'm having an A type of setup, I'm going to use 2,000 or 3,000 shares. If it's something extraordinary like A++, then maybe I go to 5,000 shares. So I always try to give a grade, and that depends on the fundamental. I'm talking on small caps in general right now, if they have dilution and such thing, and if has a big gap or squeezed a lot previous day. So I'm trying to, have these grades for each setup I trade and then size in accordingly. And the way I do it usually is what Judah said. You are going to risk 1% of your account. So if your account is 25K, you are going to use your risk per trade is going to be $250. So now you can have like three failed trades in a day. So you're going to lose like $7,500, and that would be it for the day in my book. So usually even if you have a bad trade, you better have another good one to recover. So I think that way you can keep your risk in check. At least that's the way I'm doing it. And another important aspect is the way you pyramid into stocks once they're working, because obviously, like you said, we try to have our lives as comfortable as we can, but we know that trading it's everything but not comfortable. So if you want to push yourself, obviously you have a good trade, it's working in your favor. What are you doing now? You peel some off, or you add because you think it's going to go higher or lower. It really doesn't matter. Depends what side you are. But I think we as human beings want to take the profit, right? So, and then when you pyramid, you are going to use just a fraction of your position. So you add some covers back, and then it's going again, and that's the way you recycle. But I think the best way to do it is actually to putting more size at work, and then keep your risk in check. So at the end of the day, you are going to risk whatever, $250, but if it's going to work, you are going to make much more. You are not going for 2-1 or 3-1. You are going to go to 5-1, 7-1. So that's obviously in small cap land. This could be tricky because we have all these reclaimers, and they work, and then all of a sudden the volume kicks in and they got a squeeze. So yeah, sometimes you have it. So it's always something to put in balance. So, but the way I see it, it's be as much as proactive and try to milk it as much as you can. And yeah, sometimes you have these resilient ones that don't want to die, and yeah, it is what it is. And even on the long side, for instance, I was trading Samsara IoT, so it's moving places, and it's on the long side. I was trading IoT, so I think it hit my stop a few times, but it's still there. So I'm still keeping it on radar, and but I'm just trying to keep my risk in check until it starts to work, or maybe not.
Yeah, that's something Nick said last week as well that I think easy to forget is you can just get back in. One of the things I've seen with your trading as well, like you're just really good at recycling, covering dips and then shorting pops. And just briefly, just remember, guys, that if you are enjoying the conversation, please like, and please also consider subscribing. And you can win a free month with your key messages, takeaways, aha moments, or if you just want to take the mick out of Emil, we will like that, because I do that every single day when he asks for a second on broadcast. We are pretty well. I'm going to say we've got time always flies, and one thing I will say, it's great that we have covered risk management, because Judah said that we don't talk about it enough. So are you happy now, Judah, that we have covered?
Yeah, that's good.
Good.
I feel like we never touch up on the guests, at least the guests' risk management, or like in general, like if anything changed over the weeks, days, based on the market or based on experience. We haven't really like touched up on it much. So this was like a good topic to speak on.
Very good. Hopefully one day we have a guest that goes, I don't have risk management, I just go full port every position. That's what I'm looking forward to. So before we get on to quick fire questions, I mean, we had so much we wanted to cover tonight. What would you two like to go to next? What would you like to ask Emil, or perhaps which topic would you like to go to? I mean, we had loads planned, and we're already at 45 minutes.
Emil, I know that you read a good amount, right?
Yeah, I do.
You're a reader? What have been some of like the most influential books on you, whether like with work or trading or just like a life outlook? What's been a
Yeah,
go?
I think the last book I've read was the Psychology of Money. I think it's being written by Morgan Housel. Yeah,
Mhm.
and it's a very good book. It's very easy to read. I really recommend it. It's about our relationship with money, and it's very interesting because everybody is talking about money, but this guy really explained it at a very basic level, like for dummies, that um, what's our relationship with money, and how in life everything, you have to be the right guy at the right moment at the right time, more or less. So because sometimes we try to replicate successful people, we want to be like someone, whatever it's making money, or it has fame or whatever, but we literally can replicate that because we are not in the same situation. And that's you know uh, that was a eye-opening thing for me, because you realize that maybe be happy with what you achieved as a human being, and try to be as good as you can, try to improve better, but do not try literally to replicate word by word someone else's success, because each one of us has a story, and it's a really good book, and I really recommend it.
You know what I liked about that book is when he talks about how it never being enough, and like you could have a
Exactly,
trader that
exactly,
is very
exactly.
successful. He has a lot of he has a lot of consistency in his trading, and he's successful. But then like he could see something that may be a good opportunity, and then one day it just gets the best of him, and he
Exactly.
deviates from his rules, and he just throws everything out the window. Like something that you build up for years, months, like is gone in one trade just because it
Right.
wasn't
Right.
enough.
Yeah, basically that's what I'm trying to avoid. At this stage.
Not
I
again.
mean, I'm always pushing, and I'm always trying to learn. And I guess each one of us in trading, it's not like it's always something to be improved, like a new setup, a new thingy, that might help you be better. So yeah, it's a good book, and
Yeah.
I really
Outliers,
enjoyed it.
outliers sounds kind of similar, and I always think of that as well. Like with if you think of 2020 and 21, like the way that elevated so many people's levels trading wise, obviously
Mhm.
take forward that anyone starting today might it might be
Right.
difficult to
Yeah.
replicate that. And outliers
You
talk.
got it right. It's timing. If if you want to replicate someone's success from 2020, you are going to fail
You need a
dearly
time
in this
machine.
market.
You just need a time machine, and you'll be
Yeah.
there. No
Yeah,
problem. I
right.
mean, that would be kind of cool. Um, cool. And one thing I'm interested, like you sound like you talked about your other motives, and you sound. I mean, it sounds like you really enjoy your life. So
Oh,
what
yeah.
what
Oh
what
yeah.
motivates you to keep going?
I lately, I mean, I am, like I said, I'm at a point in life where I really want to enjoy my kids. I really want to spend time with family and friends, and um, I'm not that focused like I used to be on, you know, uh, building businesses, and uh, be focused just on trading and things like that. So I am trying to um, squeeze as much as I can, but I'm not going to transform myself in a junkie again just to sit all day long in front of computer. Not at this time. And that's one aspect, and the other aspect is what I said it before. It's my time zone. So my time zone right now it's late, so I'm not really looking forward to stay all day long in front of computers. So I'm
The
trying to.
thing also with you and where you are is that your free time in the morning is when your kids are at school.
Right.
Or at
Exactly.
night when they're home, you want to hang out with them. The market's open, so
Exactly.
yeah.
Did you ever consider changing time zones, or have you always just quite like?
Yeah, maybe before, but right now it's not. It's out of the question for me.
Oh, it's
Again, family stuff,
I
and
always think that if I was
yeah, and
single, then maybe I'd.
after a while you get used to it. You have friends, you have everything in one place. So
Yeah,
yeah, it's not a viable option for me. Let's say.
yeah. No,
So
it makes a lot of sense.
yeah, I try to stick to have other hobbies, to because I think it's an underrated aspect to do something in life that you enjoy. I mean, we as a traders, sometimes this job is stressful. I mean, we all of us feel it day in and day out. So it's always something. So I think it's important to be able to unwind and to get some steam off, and do things that you really enjoy. Whatever it could be, playing golf, playing guitar, fixing things, whatever makes you, uh, you know, enjoy your free time and clear your head.
Yeah, I think that's important. And I know I go on about golf a lot, but like it's one of the few things I remember. Like I used to just never, I just couldn't switch off. And like with rugby, I still find it kind of difficult to switch. I don't know why. I just maybe because rugby's like I've been doing it longer, so I have more time to think. Whereas golf, I'm so bad that I have to like think about everything that I'm doing like all the time. But for whatever reason, it's the only thing I can go and play golf for 4 hours and I won't think about trading at all. At all. Whereas anything else that I do, I'll be thinking, oh, I could have executed that better. I could have done that, or I should have done that. And it almost like haunts me. So, yeah, I mean,
Yeah,
yeah,
agree.
I mean, absolutely. So let's finish with our quick fire round. But just before we do that, last week's contest winner, Extremely Josh 6837, you have won a 3 month of IU. Email tyler@investorsunderground.com. What has been a key takeaway from the episode or your biggest aha moment? Just liked how Nick talked about being active and flexible. It's not a sports bet where you're locked in, you have no control. You can reduce size and teach yourself. Yeah, I think that was like one of the things that really a lot of people resonated with last week is you're not fixed. You can just adjust. And yeah, his 3-strike rule went down well. And obviously the other thing that went down well last week was, I mean, his story, which quite frankly just shocked me, Chris, and Judah. We were quite shocked. Made the cut though, so obviously it's fine. We can go there. And just a reminder, we are running this contest again. So just key takeaway, something you enjoyed about this episode, aha moment, best answer wins the 3 month. So let's get stuck in. So we've obviously touched on CrossFit, and it sounds like Chris's method of the instrument here would be, I don't know, a tin of pasta or whatever it is, something Italian. But we don't like CrossFit. So if you could only use one piece of gym equipment for the rest of your life, what would it be?
I guess a rack and a barbell.
Well, that's kind of
that would be two.
yeah.
Yeah, but a barbell or a pairs of dumbbells. So
Yeah, I mean, I think resistant bands would be. I just go for a heavy resistance band.
resistant bands. Yeah,
But if you had
that
like
would
one
be.
for anyone like
Yeah.
at home, I think that's like
Definitely, I wouldn't choose something like air bike or
too painful, right?
yeah. It's
What about if you could only do one exercise for the rest? Like, I mean, I would say bench press, but I would pick bench press, but the issue is I don't know, it would just be horrendous for your whole body. Like you could only do that.
yeah. For me, it would be like pull-ups.
Pull-ups, yeah, fair.
Yeah, or like burpees.
Yeah, burpee.
Burpees would be good. Yeah, burpees would be really good. I mean, they're brutal. And Chris's would be playing with pasta in a field somewhere. And so, on that note, What has been your best purchase in, I don't know, the past year or so for under $1,000 ish?
The best purchase, let's see. Oh yeah, I bought a Lamborghini Lego for my son, which was about I don't know, 600-700.
Really?
But yeah,
What?
that's an expensive piece. But
That's what, 600 for Lego? Wow.
yeah.
We're gonna edit that so it just says I bought a Lamborghini for under $1,000, and that would be the
That I mean, you rent it and you said it's yours, so
yeah. You gotta rent the green one, keep the sticker on. Yeah. Cool. And what is like the best habit that viewers can implement starting tomorrow? And this can be like for just anything. Could be for life, could be for trading, whatever.
the best habit would be, I guess, showing up and try to learn something new each day and improving time. I mean, I don't want to sound like a cliche, like 1% every day, whatever. But I think it's important to if you really want to achieve something in general in life, and obviously in trading, because we talk a lot about this, is you have to show up. Sometimes you don't want to, but you still have to do it, and try to get better, try to absorb as much as you can, and then try to apply it.
Well, the cliches are cliches usually for a good reason. Usually because they're actually.
Yeah, I didn't want to sound in a mean way. It is what it is.
Yeah, and lastly, but not least, I know you're an avid, and I know we've spoken about British comedy before, and you don't have to say a British one just to please me, but what is your favorite comedy? And it can be anything, TV show, movie, I don't know.
Yeah, I already know I don't even have to think about it. So the best show, in my opinion, is Little Britain. I mean, those guys cover pretty much everything, and these days you can see that type of comedy anymore, and I think it's quality one, and I really recommend everyone to give a shot if you want to have fun.
And have you two, Christian, heard of Little Britain?
Sorry,
comedy?
Oh,
Yeah, no, have you heard of Little Britain before?
No,
I haven't.
never heard of it.
Emil will be sending you clips now.
Yeah.
Check your inbox. What would you two say is your best comedy then?
I can't give one. I have too many. I
Too
watch
many?
everything. I enjoy everything. Comedy movie?
Yeah, God, you got
many.
pressure. You got to say, or like series, anything. You got to say.
It's the movies, the comedies, the best ones. I think they don't make them like that anymore. Is when like Seth Rogen and Will Ferrell and Jonah Hill and all of them used to be younger,
Yeah,
and they used to play in those movies. Like those movies are always comedy,
Like Super
real
Bad or
comedy.
something.
Yeah, like things like
I
that.
watched that again
Those Step
recently.
Brothers and
Classic. Yeah,
just movies like that. Those were my favorite. But now it's not the same. Everything changed.
I suppose Chris likes Fantozzi.
Like
Do you
what?
know Fantozzi? Have you ever heard about it? That's an old Italian show.
Well, I'll check it out. I'll check it out
Yeah.
next time I work out.
Yeah, you should. You should.
Cool. Well, thank you so much for joining us, Emil. And then Chris always asks the last question. Go for it. What is usually the generic one? Like, where can we find you?
Yeah. How can people follow you? And aside from Investors Underground, because you're a moderator in there, you share your trades in real time. You're an incredible resource for the community. But how can people who are not part of Investors Underground yet follow you?
Yeah, only a place I am. It's on Twitter. It's Cuzman E, and that's my handle, and that's where I post my watch list. And that's the only place where I can be seen.
Cool. Thank you,
Good
Emil.
watch list. Worth recommending. Worth watching.
Yeah, no,
Great,
I
thank
always think with Emil as well is like really, there's great variety there in terms of like, you haven't pigeonholed yourself into, I'm not sure, small cap or large caps. It's anything
Long,
with
short,
range.
everything. Yeah.
Yeah, long, short, everything with range is there. So yeah, I absolutely agree. It's one of the watch lists that I check out every single evening. So yeah, thank you for doing that. Thank you for joining us. Just a reminder, guys, like, subscribe, enter the competition to win a free month of IU, and see you next week. Thanks
Thanks for
joining.
having me, guys.
Thank you.
Thanks, Emil.
Thank you, guys.
Thank you.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of our others with some great traders. Thank you for watching.